Good morning, traders. Welcome to a new week. Hope you have a very good week. Morning to my two colleagues, Kay and Stell. How you doing, lads?
Hello, good morning. All
Morning,
good?
morning.
Morning. Everyone had a good weekend?
Perfect.
It was raining cats and dogs here.
Yes.
It wasn't great, but today 30 Celsius, by midweek 35 and full on summer. So here's how they call it, climate change for you.
Yeah. So yeah, we had a bit of I wouldn't say stormy in some parts, but a bit of a cool weekend for us here. But I think we're getting the sun back. So yeah, bring on global warming. I love it. Bit of sunshine. Right, so a bit of a quiet start to the morning. Lots of China headlines doing the rounds, so we shall start there as we often do. A lot of banks downgrading China growth forecasts. A lot of predictions of further rate cuts to come over the various different rate settings that China has across its finances. So we can expect maybe some more of those cuts coming as early as this week. We have the LPR announcement, I think Thursday, if I'm not mistaken. So we're expecting slightly bigger cuts this time. We were getting 10 basis points in the last round. Market expecting 15 basis points coming in the next round. We've got this meeting between China and the US. Blinken meeting various counterparts, and he's just met leader Xi, and not too much comments so far out of that lot, but Xi said that he's told US's Blinken that very good progress has been made on US-China ties. Hasn't embellished on that further, so we'll wait to see what those are. Maybe some good risk headlines to come a bit later, who knows. Personally, I'm not expecting much by the usual pleasantries and must keep communication open and that sort of thing, but who knows, we may get something dropping later on when we get the details of that meeting. Over in Japan, Japan's financial regulator has apparently spoken to domestic banks about possible risks they have to China. They want to know that if relations between the West and China worsen, that the banks have got ample coverage on their risk, whatever parameters they've got, to make sure they don't come unstuck if anything happens there. Obviously, now that we're over the Fed and ECB central bank humps, they're all coming out of the woodwork. They all came out of the woodwork on Friday. They're still been coming out of the woodwork over the weekend and today. ECB's Centeno said monetary policy is on a restrictive terrain. He's one of the doves. Said that we should remain there for some time after the summer. Although hikes or higher rates is not a support to growth, but we must act to control inflation. The overwhelming majority of inflationary shocks, if not all, are now almost reversed. And it's not good to anticipate the outcome of future ECB meetings. ECB's Wunsch says rate hikes may have to continue beyond September, and is not yet seeing the beginning of a slowdown in core inflation. ECB's Villeroy said nobody should rush to a premature conclusion about our calendar nor about our terminal rate. Latest market volatility seems somewhat excessive. We are data driven, not forecast driven. And one of the arch hawks, Kestrel Casimir, says we need to raise rates again in July, but was a little less dovish in his next comment, saying that regarding September, I'm awaiting analysis of the cumulative impact of past ECB's measures. Cumulative, that's the word I'm looking for. Stopping rate hikes too soon is much more a significant risk than over tightening. The Bank of Italy has got itself a little bit bullish for its forecast this year. It now sees 2023 GDP coming in at 1.3% versus 0.6% in January. So over doubling its forecast there. However, it has cut 2024 growth to 1% from 1.2%. Sees average inflation now in Italy by the EU harmonised rate at 6.1% versus 6.5% prior. So brought in its inflation forecast, but still running at a very hot 6.1%. The ECB has told banks to brace for harsher stress test results in its upcoming next round of stress test releases. This is all to do with the impact of higher rates. They're going to be testing much harder to see what's going on, make sure there's no skeletons in the closets, as we've seen elsewhere, what happens when rates have run higher. Fed's bargain last week said it says he's comfortable doing more on interest rates if incoming data doesn't confirm a story that slowing demand is returning inflation to the 2% target. Higher rates may create the risk of a more significant slowdown, but experience of the 70s shows the Fed should not back off its inflation fight too soon. Fed's voila, so far it looks like the idea of labour market softening without much rise in unemployment is holding up. Core inflation is not coming down like I thought it would. Core inflation is not moving, or core inflation not moving may need more tightening. So last week, I haven't even got it up yet. Last week we got some data from the Michigan Friday. It's about the only data we had on Friday. And let me just call it up. There was a bit of surprise from the inflation numbers. Overall, the numbers out of the survey, consumer confidence held up pretty well. We saw a rise in those numbers, sentiment in general, expectations, current conditions, all higher. But it was in the inflation numbers that the news was. The 1 year inflation dropped a big chunk, was expected to come in higher, and it actually fell to 3.3%. The 5 year dropped a pip to 3%. So coming in a little bit lower. So that's pretty much soft landing numbers for the Fed there. Higher on sentiment, expectations and whatnot, lower on inflation numbers. So we're back in the soft landing mode for that. Not that it was much help for the dollar. What do you guys make as we finish the week last week, how things were left, particularly regarding central banks and stuff? That data on Friday, Kay, the Michigan stuff.
Yeah, a bit of a mix, yeah. As you say, a bit of a mix, bit of a surprise drop there, but we've also seen, and now it's kind of becoming clear that the expectations are for the short-term inflation to drop everywhere, but then the longer term remaining sticky. So I think that's what I saw on those numbers. Of course, the dollar wasn't doing well, but as we said already on Thursday and Friday, it looks as some people have been just waiting for the two meetings, ECB and FOMC, to be over and then sell a few dollars, especially against those against the currencies that have de facto been hiking and the ones that are expected to hike. So we saw this whole scenario of euro being a bit stronger, yen weaker, but the Aussie, the CAD strengthening further, and then sterling gaining on what's expected to be a week where Bank of England is going to raise rates again. On that front, maybe a little later more, because there's a big appointment just ahead of the Bank of England with the inflation data out on Wednesday. Regarding the PBOC, as you were saying earlier, I think the rate decision is tomorrow. So not on Thursday. Thursday, I think they're actually off. But it says on the calendars tomorrow. So
tomorrow, is it? I knew it began with a T.
Yeah. So on this China front as well, I've seen Lee. He's in Europe. He's visiting Germany and France this week, right?
Yeah.
So that may be another one of these, especially after Macron was saying that Europe should not be following anyone else's opinions and actions that Europe should decide for its own. So there may be a couple of interesting lines out of there as well. I haven't seen any yet, but it could be, because I think he is there now. So we'll see what happens there. But yeah, I think that is what happened last week. We see today. Well, the states are off, right? But it does seem that the rot in the dollar has halted somewhat versus the other currencies. Aussie dollar was an interesting one because it did cap around 68.90, which is a relatively important one for me. Relatively important level there. And yeah, dollar China is sort of powering on. I'm quite happy that we are back above 714 and a half, 15. I did there's a bit of a trend line there. I did take some of the ads in the 712s, but yeah, that is still going all right. I think there is a chance we are going to get a look back again at the highs if they effectively cut tomorrow, cut enough tomorrow, you know.
Yeah, no, I agree with that. I think the path continues higher. There's certainly not been any additional warnings or any warnings about the currency at the moment. So the green light is still lit as far as I'm concerned, and we are getting the next round of easing, although it is largely expected. So it's not going to be a surprise to see them easing. So maybe it makes the upside a bit more hard work, but the market is pretty bearish on China, and that's going to continue. But I mean, personally, overall, I was looking at the numbers, and overall, it's a lot of last week has been yen led. Looking at the majors, yen was the only currency to lose out last week against everything, including the dollar. I'm not even sure that this is a dollar move more than a yen move, just looking at the numbers. So yeah, what might that be? Might that be some, just say getting over the central bank humps, more carry trades being put on because we're getting higher rates in those, and the Bank of Japan confirming they're staying on hold?
I think so, mate. If you look at the let's say the purest of carry trades right now, which is the mix yen, it's really it has exploded. That's one of the pairs where I'm a little disappointed with myself not to have been in that, because that was really the purest of the carry trades. I've got a bit of other stuff, but yeah, it's really yen. Of course, euro yen as well after the Bank of Japan. So yeah, yen lost a lot, but then we can't deny the fact that the dollar has weakened as well after both central banks meetings, right? Euro dollar higher, cable higher, Aussie, even the Kiwi where they did not move, and where we had some weaker data, even the Kiwi went up against the dollar. So
yeah, I mean that picture I've just put up, that's versus the dollar and that's all last week. So that's Monday through Friday. Yeah. The performance of those currencies versus the dollar. You see the yen is the only one on the negative there. Absolutely. All the others gaining, and it's completely green when you mark everything against the yen as well. So yeah, I think it's a big driver at the moment. Still, what are your thoughts on things as we finished last week, come into this week?
First of all, I think the yen is a carry trade. I mean, we're seeing again, I think, as we've seen in the past, waves of this, and it makes sense that people want to borrow in yen and buy all sorts of other high yielding currencies. And the risk here is obviously on the unwind of these carry trades, but at the moment I think the flows are one way. So I agree with you guys 100%. Now, regarding central banks and rates and all, I've said my opinion before the skip, and I said I think we are going to be very, very close, if not at the top of rates for the Fed. The Bank of England is and the ECB have more to go, especially the Bank of England, I think, because even though some of the data is starting to turn like some PMIs, but overall any price data you look at, even employment, average earnings growth beat comfortably last time. So second round inflation effects coming for sure. So the Bank of England has to be a little bit more hawkish. That's probably a first for the Bank of England. But anyway, but overall, I think the Fed, which, let's face it, leads everything, I will stick by my prediction that this was a pause and not a skip. We are going to get quite a bit of data before the next meeting in, I think, end of July, isn't it?
Yeah.
We're getting another CPI print, and I think we will see the core will start also dropping. I mean, how fast, how quickly, I don't know, but that's also going to start dropping, and that's what the Fed want to see. But I really do think that they're going to have lots of reasons to pause, basically, not to hike anymore on this cycle. And I know I sound crazy by saying this because inflation is still higher than target, but all central banks, what they do, they look at a year or two forward and they try to gauge whether what they've done is enough. And also they try to gauge what the effects of the tightening will be over the next year or so on the economy. And that is something that really doesn't look good. So who was it? Was it the Atlanta Fed that's forecasting a negative GDP now for the next print or something like that? So it's starting to show, and it's these guys are not stupid. I'd like to think they know what they're doing. Sometimes they look like they don't, but I think they can see that the economy is turning and that we are heading towards a recession. Is it going to be a mild one or a deep one? Well, that depends on how far they take rates and what do they do with QT, etc. So in effect, in a way, it's in their hands. And and we have seen inflation, the headline number, go from 9.1, if I'm not mistaken, to 4. I mean, that's a steep drop. And if you look at the chart, how it rose and how it's coming back down, it's symmetrical. So they can easily say, yeah, in 2-3 months time, the print is going to be at 2%. And they could be right. If you look at I look at the investing.com charts, which I really like, the year-on-year prints as they progress. And it's a perfect symmetry from the top. Anyway, bottom line is, I think the Fed is going to be on hold. Obviously, if numbers start looking better, and I mean higher inflation or anything like that, that's going to be off the table. They're going to hike again. But I think as things stand, I think it's maybe a little bit more than 50-50 that they go on hold. And I know I'm not in the majority of what people think, and the markets are pricing to one more hike and then cuts in early 2024. And if the Fed does stick to those rates and doesn't hike anymore, you can bet that all the other central banks are going to have pressure on them. And maybe they put the pressure on themselves, but usually the central banks follow what the Fed do with a little bit of a lag. So maybe one more hike from the ECB and the UK. UK might have another one after that, but really I think we're close to peak rates here. That's I know it's famous last words, but I really do think so. I
agree with you as well. I don't think there's many more in the pipe from a lot, unless inflation really does prove far more sticky than they anticipate, and then we'll see where we have to go from that. But
exactly,
it's going to be a strange world if they're going to be reacting month to month, because policy takes longer than that to start working. But we'll see what they do. Those clowns, like you say, you think they might think they know what they're doing, but I'll have the other side of that trade, mate. So let's have a look at what's coming up this week. Obviously, the Bank of England is going to be the big one on Thursday. Not the only central bank up on the spot as well. We've got the SNB coming in Thursday as well in the morning before the BOE. We've got Norges. We might have some fun and games from Turkey as well, who are expected to hike their rates up massively from the current 8.5%. Some banks thinking they might hike to 25% from 8.5%. So that might be an interesting one to grab the popcorn for. On the data front, it's not a huge week for data. Friday, we start getting the flash PMIs from Europe and the US and everywhere else. We do get a bunch of housing data this week, starting today with the NHAB in the US. Then we got housing starts and permits tomorrow, existing sales on Thursday. Some CAD retail sales squeezed in the middle on Wednesday. Keep an eye on that for your loony traders. And as Kay mentioned, we've got the UK CPI coming in on Wednesday as well, just before the day before that BOE announcement. So again, this might be one that's might be bigger than the actual Bank of England release. Now, the Bank of England, I think, is a monetary policy report meeting. So it is one that comes with a presser. I shall double check that later. We've got plenty of time to score over that one anyway. So a reasonable week on the data, nothing too huge from the US, but plenty to keep us going this week anyway. So let's have a quick look at what's going on in the charts. So it has been relatively quiet this morning. Yen has been again weakening, but not really making any new highs. Obviously with the US shut, we may find that things are going to be a bit quiet. 142 is where we're knocking our head on at the moment in dollar yen. I've got some levels just above. We've got this November high, which was the bounce point after we got this big move down, the big breakdown, well up in the 145. So a bit of resistance probably coming in there around 142, 20s, 30s before we hit this 61.8 fib at 142.50-ish. So that's going to be a decent level to watch as well to see if we can break that. If we do break that, there's a lot of eyeballs coming in around 145, people thinking that that's the number that Japanese authorities will be looking at to maybe step up their jawboning and intervention talk and the like. We know from history they don't tend to put a number on things. It's all about the volatility. But that may not stop the market from getting all antsy if we get up there anyway. Just having a flick through, and I'm sure Kay will cover the other pairs in details. But as mentioned, if we look at all through the yen pairs, you can see what the story is therein. So these yen pairs are still helping to keep the majors afloat because euro dollar hasn't pulled back too much after its push up last week. We got above this area. This is a long-term trend line going way back to 2017. We had an old number up here at 109.40s. We had a move above it, but we're now back below. So with things being a bit quieter today, perhaps in the US, that's the area to watch, that we find resistance into that zone there between 40s and 50s. And then we look to see if anything happens on the downside. We're already finding support round about this area here, 15s, 17s. The big figure will be next, and then down into the old zone, 108.70s down to 30s. So just watch those if we might get a little bit of scalping opportunities if the levels hold. Dollar CAD, I got knocked out my longs. I was trying longs into this 132 area. Got knocked out on Friday, as usual, right down on the lows, where my stop is. Always marks a low, my stop, or a high. Don't you traders find that as well? Anyway, such is life of a trader. But I don't think it's a bit undecided what we're doing here now, whether we're going to break down further or get back above 132. Again, the bounces look pretty weak when we're mooching above 132. So it does keep the downside pressure in play as far as I'm aware, but we need to keep an eye on that 75s lows, see if we can break below there. And as Kay mentioned, dollar China, I got in back into longs last week against 711, 712s, and it is looking more constructive this morning. So I am also looking for a push up back towards the highs and see if we can get up through this 720 area and maybe get a look up 724s, 25s, that sort of area. Got a little TP in on some I bought on Friday at 717.50. So I'm looking to knock a bit out just as we get back towards these highs here. So that's on that front. Support at the moment, still around here. I don't want it to go below 710. I'm keeping a stop pretty tight under 709, but if you get under 710, it's going to be looking maybe a bit uglier for that one. But otherwise, yeah, trend is your friend. This looks like a little refresh for now of this big move up. So long may it continue. Euro sterling is another one. spoke about last week that I wanted to get in short over the ECB to run into the Bank of England. Obviously got that data coming up is going to be important. We do have a decent support area down here, 84.80, 85s, low 85s. If I see anything close to that, I'm going to knock a bit off just to put some in the bank if I can get some away before the data on Wednesday. If I manage to do that, I'm more happy to keep hold and run it, even if we get a softer CPI number. I don't think it changes the Bank of England hiking and having to do more. It's going to have to be a real big drop in inflation to get me looking at getting out that trade, perhaps. So I'm happy to hold over the data over the Bank of England as well, and I'm looking for a breakdown. And once I know what's happening there, maybe I think we get to extreme levels of pricing for the Bank of England, and down 84s, 83s might be an area I look to get out that trade, and then see, maybe think about getting long again to see what happens on the reverse angle for expectations for the bank. That's my thoughts for this week anyway. Still, Kay, you want to have a little look around or anything you got in particular you want to have a look at?
I don't know if Stelios wants to have a look, or should I just...
Don't have much new from last week to show. I can always show stuff if you want, but
well, I mean, yeah, perhaps tomorrow still then, because tomorrow I can't be on the show. So
yeah, tomorrow, perfect.
I'll show a couple of things today then.
Okay.
Yep. Okay. Let me hand it over to you. And while I'm doing that, Ali's got a question. Morning, Ali. Says rate cuts are not soon from the Fed. Inflation can surprise in future. Fed members will not give up on hawkish rhetoric. So how can we expect euro dollar at 1.15? Well, inflation is coming down. It's been coming down for a year now. Yes, it can surprise to the upside, but you've got to look at things historically and where rates are going to go. Can we see rates at 7%, 6%, 7%? Yes, we can, but it's going to be a hard task to get them there. So really, we're still trading the ECB more over the Fed, so that can give us a higher path. If the Fed are on pause and if the economy is weakening, then the market's going to trade cuts, and that's going to mean weaker dollar. Even if the ECB comes to a pause, it's still going to mean the Fed is seen as the biggest bank. And so the influence for the market is going to be over what happens in the dollar, and that could quite easily take euro dollar up to 115. I said last week there's a high bar for seeing the dollar strengthening last week, and the case was that it didn't. Although, as I said, a lot of it is about the yen. But 115, it'll be a stretch. I think 115 in the euro dollar, but you never say never, and it doesn't matter what I think, what you think. We can guess all day long. The market's going to go where the market's going to go, and we just have to react to it. So if you get 115, your question is what you're going to do if it does get there. Over to you, Kay.
Yeah. So first of all, keep a quick look at what happened to that dollar and to the yields. This is post the Fed, actually. This is post the Fed, right? So we had this yo-yo on the back of the Fed. Even yields went up a little bit again, so the market didn't really know what to do. But then this is post ECB, actually. So the market went for a little bit of a scissors move, and that was driving the euro dollar up as well, and the rest of the dollars down as well. So this trend line has been watered down. Look at what's happening around in those 380s and stretch it to 388, 390. This is going to be, if we reach there, we've been talking about those 390s many times now. This is, if we get a test up there, this is where things will probably matter. What we do up here, if we get up there, this is where it'll matter really what happens next. Looking at the data, pure data, I don't really see a strong reason right now to break this level. But there is you never know about the data, and there's also this thing about the treasury needing to replenish their coffers and their accounts, so they may, like, just because of the bond sharks not going to give them money for free, they may probably, or likely, or possibly, I should say, have to pay up a little bit and keep those US yields supported despite what's going on everywhere else. Right, we've seen this. We were talking about those 30s in gold. We had this break below, but we failed to go and have a look at the trend line here. So there's another important level down here in the low 19s. On the top side, I think nothing's changed. We are back at 1950, back in the middle of that range. This 1950 looks a little bit like our cable at 124, 40, 50 from a while back, which was magnetic all the time. We're waiting for new developments here to really take gold up or down. And for the time being, I think we should actually wait. You can trade that range, and I think perhaps the 1930 is back valid in some form if you want to trade the range, but for the time being, I'm not very interested in doing anything there. Silver has been, we saw that setback as well, but then we held really well there around the 23.25, which is our famous old trend line, and which is regularly coming down, of course, but it does look like the market has its eyes on it. And then we get this bounce, and I think this is now obsolete, and we're back in this range. We really need to break above. We're starting with 24.30, but for me the big one here is 24.65. If we start to move up above that, then I think we may have seen the whole correction, and we are going to start to move higher again. So that to be followed. For that, the yield shouldn't go too high, and the data, industrial data, should hold up as well to really push this one higher. Cable into the Bank of England and the inflation report. We had the break here of this longer, more medium-term trend line all the way back through the 126.20-ish. We also tackled the prior highs, and cable is still doing very well. And as long as we are above this zone here, it should be medium term still positively oriented. We have to note what's happening. So the next level is really 130, right? 130 prior bottoms, bounced, bottom, bounce, and then when it broke, it's end of story, and we went a lot lower. So if ever we get there, very important, I think, psychologically, but also we do have market activity supporting the fact it's going to be a very important level. On the downside, if we start to get back below this 126, the party may be over, and then there is a risk to go much lower. Will it happen on the CPI? I don't know, but as we know, CPI has been a big driver of a lot of stuff. So keep a very close eye on what's happening over CPI on Wednesday before even thinking about the Bank of England. Okay. Anyway, that's what I'm going to do. Euro sterling. We're very close to our next FIB level here in the low 85s. I've started to manage a little bit my fresh shorts this morning. I will manage a little bit more around this FIB here. It's at 85.10, and then because I want to not only bank stuff, but because it's always nice to grab a bit of cash on positions, but also I want to be cautious, because we could, not saying it will, we could. There's just a possibility that that the CPI all of a sudden springs a negative surprise. We just don't know, right? So therefore, I want to grab a little bit, and a little bit more if we ever make it to the 84.75, 80. Base case is that still Bank of England should have to raise, but to me that is not always a guarantee for a higher currency inflation. You know, we've seen high inflation actually weigh on currency, so we have to be a bit careful with that blind confidence that higher rates due to higher inflation should mean a higher currency. But the market trades it that way, so I'm not going to try to be funny and trade against it. I still think as well that data were supportive for the sterling to be just underpinned. You know, one of the better ones. Yen. So we broke above all this. We broke above this channel as well. We've broken above prior trend line. Now, all of that was happening around 135.5. We went into the Bank of Japan at 140, and then that was it. So now we are trading carry trades, yes. And we also, as I said, a higher Nikkei usually comes with a weaker yen. We had a bit of lukewarm or average reaction over the past few days, but you have to know when people invest in Japan and you invest in ultra low currency, you just don't go and buy the currency. You do it via swaps and stuff, and so sometimes those higher stock markets, even if people invest in a country, don't necessarily mean a higher currency. They are not just going to blindly buy yen. But I just saw as well an article that Mr. Buffett actually increased his holdings in Japan. So perhaps sooner or later this is going to have an impact. But for the time being, keep an eye on what's happening here. I still have got some running, some of my 140 options running. So that's I'd say let's just go and go and test this 142.5, and then what Ryan was already talking about as well, 145, 145, and then when it broke down, it really went down a lot faster. Of course, helped by interventions, but also this was when the first time when U.S. inflation dropped. This one was actually not. If I recall well, this was not an intervention. This was U.S. inflation numbers, okay? So if ever we reach that 145 level, it's going to be your 130 in the cable. It's going to be important around here, especially that the market is putting a lot of expectations in the MOF coming into action. But first of all, 142.5 has to go. On the underside, I think 139.60, 50.60 is now going to be your level where market will say like, okay, if that goes, then perhaps the party is over, and then we have extra levels down in the 137s. This one is a bit of a spaghetti chart because it's a weekly. There is this, and Blake mentioned this as well on his week ahead video. If you guys want to have a look at that, he spoke about this level. This is coming back from the 1990s in euro yen, and we are turning around. We are really turning around, and that's came in at around, call it 155 roughly. So this is going to be a relatively important level, and I'd say wait for perhaps tomorrow or so when the market will pick up speed with the US coming back. But it's a pretty interesting level on the more medium term. It's also a bit of a target zone here for this uptrend in the channel. Pay attention to that 155 in the euro yen. Yeah, I'll have a look at sterling yen. Yeah, and I know that Abir is very interested in that as well. So Abir, we have broken above this 180 mids zone, and we are now going up to the 161.8 of this move at 182.40.50. It could be enough up there, because also another one of our friends in our chat room who is watching Harmonics has a target over there in the mid 182. So I'd say view that as a decent level, okay? Mid 182s. If you're long or if you're looking at stuff, keep an eye on that one. And if that weren't to be enough, then on the long term, this is the whole global financial crisis, even the European crisis there involved as well. The whole move from 2007 down to 2011, the 50% is 184 in sterling yen, okay? That is likely going to be another pretty important level. The thing with those yen crosses is that they're all at very lofty levels, all of them. Although the CAD yen still has room to get back to 2022 levels when we were trading at extremely high levels in the energy, right? Those energy currencies, they really got a big boost during that time, and that's where and we're raising rates as well together with the Fed. We're not there yet on the CAD yen, but we have broken above the 78.6. So as long as that goes, still positive. And whatever yen cross we look at, we are at really lofty levels. But are you going to fight it for as long as the radar remains dovish, which they were over the Bank of Japan meeting? It's too early. It's too early. Yes, they will start to normalize, as I've been saying many times now, but it'll all depend on the speed and where the other central banks end. And then we'll have to look at real data as well, because if the rest of the economic world global data don't fall out of bed, there is also little reason to be long yen, because when you're long yen, you're paying money every day, and that is something where I have a bit of an aversion to, especially if the Bank of Japan would already be normalizing. It would be a completely different picture. This, but for as long as they haven't started, it's very tough to be long yen for longer. Okay, so this is the Aussie yen. Kiwi yen is also at an interesting level. It's bang on the prior highs here. So keep an eye on those levels. They may spark a little bit of profit taking on all those crosses, but if you look, as I said, in the more medium term, it's very tough to be long yen for as long as there's not going to be something really that is going to support this long yen position, right? Okay, CNH, Ryan already showed it. I did take a few off because we came back to this broken trend line. So I'm back to base position now, planning to reload for as long as the rest doesn't change, planning to reload here. We did hold this retracement support here in the 710s. So that was encouraging for the dollar China bulls. And we're back up here. So now we wait to see what they do tomorrow with their rates. Yeah, there's one that I've re-entered as well, because this sterling Aussie, for as long as the Bank of England now, because the Aussie is going to trade a little bit with what's happening in China, and we are expecting the Bank of England, and perhaps the effect of the Australian rate hike is sort of done. So what was interesting here last week is that we held really well the support trend line. So I think somewhere in the mid 185s to low 185s, we should find support in this sterling Aussie right now. Of course, Wednesday, all bets can be off, and if it breaks below 185, this is going into the bin. But for as long as it holds and this trend line holds, this looks a little bit supportive to me, and we could possibly be on our way to slightly higher levels there. Anything else you people want to look at? I'm just going to have a quick look at what's happening in Euro Swiss, because we are starting to find really very good support around 97. And we are trading a bit higher. This is also what happened last week, and on the ECB then. but I don't know. It's starting to show signs that we may perhaps have bottomed out. I'm going to be very, very interested in what the S&P says and does this week. And if we get a retest of those levels and hold again, I may finally start to think about having a position in Swiss franc again. It's hard to sell Euro Swiss here, I know. But for me, there was no reason to really buy it yet. But if we get a signal from the S&P, then I think we're back at parity in no time. So that's my view on the S&P. Yeah, Mavi, we have looked at gold and it's in a range. There's one that we will have to look at. And why did my chart blow up here? I don't know why this chart blew up again. So we had I really don't know what's happened here. Oh, must have been the weekend joy. Somebody resetting stuff, a trading view, I don't know. We did break sub that trend line here in Euronoki the other day, right? But now we are back above those levels. It's holding under 1150 right now. We have Norges Bank up this week, and Norges Bank is going to be interesting, I think, because the wide expectations are for them to do 25 BPs. But I've seen some of the Scandinavian banks calling for a 50 BP move from the Norges Bank, and the Norges Bank turning more hawkish because their inflation over there is sticky. So this is going to be one that I'm going to be keeping a very close eye on, because if we, in the meantime, have a move back up to these 1170s, it may be, maybe, just maybe, a cheap enough punt to have a cheeky bet, a little casino chip ahead of the Norges Bank. I am going to have a look at that as well. Swiss yen, I'm not looking at it. I'm sorry right now, but I can have a look at the S&P if you want. So this is, I know people are looking at stuff completely differently, but this is my S&P look, and we're turning around this this wedge top. 44.10, we're turning around, and I think this is an interesting level enough to look at what's happening at the start of the week. Of course, the States are off today. It's going to be a wait for tomorrow, I reckon. But then the next levels above are not before the 45s, and then perhaps even 46, for me at least. In the shorter term, so these 44.10, and then see what's happening back into the lower 43s. I know oh, hang on a minute, what's happening here? Oh, okay. I'll have to look at a different chart very soon. I'm going to update it. I'll update it this one a bit later. So actually we are at a reasonably interesting level back here as well at 44.45, and then yeah, on the other side I don't have much before low 43s, to be honest. And Ryan, with that, I'll give it back to you for today.
Thank you very much, sir. Well, a good start for the week. Getting you guys and girls set up so you know what's coming this week, and hopefully you know how to trade it. So I hope you make many pips this week. Thanks to Kay, thanks to Stel. Kay we won't see tomorrow, but we should have some magic from Stel Master.
Magic, yeah. I would seriously disagree with that word, but anyway, thank you.
It is magic, mate. It is magic, mate. Don't put yourself down. So yeah, thank you very much for coming to the Flow Show as always. We look forward to seeing you bright and breezy tomorrow. See you all. Bye.
Thank you. Bye-bye.